Now we're talking. Now we're talking. Back to work tonight. One more day left this week. Got some big news tomorrow morning. Got some big moves on the charts today. That is usually a recipe for success in our trade room the following day. Welcome back, guys. It's Thursday evening. It's time to get back to work. It's the 9th day of December 2021. My name is Joseph, and as always, welcome back to our nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Friday's trading session. I got a great video in store for you guys and gals tonight. Charts are already in the background. As you can see, the oil's here, NASDAQ's here, S&P's here. Glad to see you are here right along with me. Boy, where do I begin? Bunch of big moves down today. Will we get some ranges? Will we get some pullbacks? Maybe some reversals? Got plenty to talk about. A lot of great trades on our radar for tomorrow, Friday's trading session. Not to worry, I'm going to break down all my favorite trades in tonight's video. And before we jump into the video tonight and get our hands dirty on these charts, I want to make sure you subscribe to our YouTube channel. You know, we publish these videos every evening during the week with our best trade ideas. I don't want you to miss tomorrow night's video, so make sure you subscribe to our YouTube channel. If you have any questions for me, drop me a question in the comments section. I'd love to answer any questions that you might have along the way. And if you enjoy this video as much as I enjoy making it, do me a favor, hit that like button for me. I always appreciate you guys tuning in and sharing the love with that like button here on this YouTube video. But enough of the intro, though. Time is ticking. Thursday is over. Friday is right around the corner. Like I said earlier, I got a bunch of big moves on these charts, right? Everything's bearish right now. Everything's deep in the red here. S&P, nice big bear move down. NASDAQ, big bear move down. Oil, nice big bear move down. Now, they're all bearish, but, you know, let's face it, they're all a little bit different in the way in which, you know, we're looking to kind of trade these things right now. I'm looking for possible ranges tomorrow. Obviously, I would love to sell some bounces, right? Sell some bounces. That would obviously be a given. But, you know, I'll tell you, tomorrow, rollover coming, big news tomorrow, end of the week. This bloodbath could continue going lower, and so I want to make sure we're ready for kind of how we can find the best entries if this thing does keep going lower here for tomorrow. And you know me, I'm going to make sure we're covered on reversals, right? Because we got some big news tomorrow. We got rollover probably sometime, right, tomorrow morning. So is it possible for a reversal? It is always possible for a reversal. Now, I will say, I think out of all three of these markets, I think oil is probably the one that has the most potential for the reversal. And I'll talk about why I think that here once we go a bit deeper into this video. But I'll tell you right now, we're going to cover a lot of great opportunities to help you guys finish up the week tomorrow in the green. And of course, you know, stay out of trouble tomorrow morning whether you're trading on your own or you're trading with us in our daily trade room. Now, speaking of tomorrow, let's talk about the schedule for tomorrow, because tomorrow is kind of a busy Friday. Now, of course, we have that CPI report, right? We've been talking about that. We've kind of been fantasizing about that all week this week because, as I mentioned earlier this week, this is the second week of the month. So, you know, there haven't been any Fed speakers. There really hasn't been much as far as major news the entire week. So this is kind of this is the granddaddy of the news here coming tomorrow, that 8:30 Eastern time. You know, we're seeing what, 6.3% inflation right now. Will that be another big headlining number? Will it be another record-setting inflation number tomorrow? That is definitely something you have to assume that everybody, or every market at least, is obsessed with here tomorrow morning. In addition to that news at 8:30 tomorrow, we also have rollover, as I mentioned, on the E-mini S&P and, of course, on the E-mini NASDAQ. Now, we didn't get the rollover today, but we're kind of sharing volume right now. What you want to do for tonight or into tomorrow, we're currently on the 1221 contract for the S&P and the NASDAQ, but once you start seeing that volume roll forward, once the volume is greater on the 0322 contract, that's when you know it's time, right, to make your move, right? So, you know, for example, if I grab my market analyzer here right now, you can see pretty clearly here, right, the S&P, we got a lot more volume right now in the 1221 contract. So that's our contract right now. That's what I'll be analyzing tonight. But unfortunately, I would imagine tomorrow, we come in tomorrow, you know, if this is anything close, right? If they're within 50,000 contracts tomorrow morning when you get back to your desk, 7:30 8:30, 8 o'clock, 8:30 Eastern time, you're going to want to make that rollover. I've learned that lesson many, many times. If we're somewhat close tomorrow, just roll forward to that 0322 contract. And, we talked about how to do that today in the trade room. And if you need more help on that, just make sure you come out and join us tomorrow morning at the opening bell. NASDAQ, you can see NASDAQ's a little bit further apart, but it's likely tomorrow we're going to see that rollover, right? Again, you can see 600,000 contracts on the 1221. Look at the 322 is obviously very low volume right now, but it's starting to look like they're going to get that turn here at some point early tomorrow. Again, if it's relatively close, if you're within 10 or 15,000 contracts difference in the NASDAQ, if you're within 50,000 contracts on the S&P, I would make the move over to that 322 contract. This will not affect the oil. So the oil usually rolls over around the 18th of each month. You will want to keep an eye out for rollover on crude oil around the 17th and 18th of the month of December. That's pretty much every month, like clockwork. And of course, kind of last little tidbit here on the calendar for tomorrow. As I mentioned in earlier videos this week, tonight's newsletter is my final newsletter of the year 2021. I do take an annual break to update our systems here at School of Trade, and I'm always working on new video classes for all of our students. So tonight, unfortunately, I hate to leave you guys hanging the rest of the year here, but I'm going to keep investing in our education, investing in our systems here, and I do that towards the end of the year. Not to worry, of course, we'll be in the trade room tomorrow morning at 8 o'clock Eastern time, like we always are Monday through Friday. What I'll do is I'll put all of any important links I talk about tonight, I'll put all those membership links, all the trade room links, anything we talk about, I'll put that in the description of this YouTube video. So quick recap here again. Major news is that CPI report tomorrow. That is the big news. We are watching for rollover on the S&P and the NASDAQ. And again, I can help you with that tomorrow morning before the opening bell in our trade room. And of course, this will be my last newsletter of the year. We'll come back the first week of January rested, refreshed, and ready to kick some serious butt in 2022. All right, let's get back to those charts here. I can't believe we're talking about 2022 right now. It just seems surreal, right? Where are those flying cars they promised us, right? They probably are out there. I'll probably search YouTube for it. Anyways, back to our charts here. S&P, NASDAQ, oil, everything's bearish. Again, there's no doubt about that. Everything's bearish right now, but they all kind of have a little bit of a different twist on them. Let's take a look here at the S&P first. The E-mini, again, you can see once again, this is the 1221 contract here. We will likely be rolling over to the 322 contract at some point tomorrow morning. And as I mentioned earlier, if it's close, don't hesitate. Just make that move over, change your chart to 322, and make trade in that tomorrow. What's going on here right now in the S&P? The S&P is pretty straightforward, right? We of course, like we talked about last night, get that reversal off the high, right, into a trading range. And you can pretty much see the market, right, shot lower. The seller's got a beautiful, what we call, right, breakout pullback. I mean, how many times have we talked about that trade on this video newsletter, right? And now they pretty much have kind of retested that low. And you'll notice we're bearish, but we're sitting at quite a bit of support right now, right? So we got the measured move there. That's going to be an area of support, right? Remember, the first leg and the third leg, right? The middle leg's always kind of the oddball, right, when it comes to measured moves. And then of course also too, there's your trading range. The size of the breakout leg is the size of the measuring leg. So there's no shortage there of measured move support levels. We also have this guy over here, right? This was that big low that we talked about, earlier in the week, right? So we have that level kind of sitting there. And boy, while I'm here, look at that range here right now, right? So you could definitely tell there's a lot of volume trading hands in around that 46.85 area there. So we definitely can see we have a lot of support, right? So at this point, I think the biggest, probably the most important clue that I can see in this chart, which is one very big difference between the S&P, the NASDAQ, and the oil. This is one big difference the S&P has right now. The S&P made a strong move down there, 215, 230. Anytime we see a strong move in one direction, what do we expect? We expect a pullback and a retest of that low. So in all reality, it's the way that I would refer this is the S&P has now completed its mission, right? They've completed their mission. The sellers, they got their measured moves. They took out the lows. They even came in and retested that low. So at this point, how do I attract more bears into this market? Right? How would I have to kind of sweeten the deal, right? How do I attract more sellers into this market right now? Because at this point, the bears have pretty much got pretty much everything they wanted here out of this day today. I have to either I have to get to a higher price, right? Because sellers want to sell high. So one way to attract more bears into this market would be to give them a reason to get short, right? So, give them a pullback off this high, right? Up in that sell zone. Another way to attract some of these bears would be to go sideways. Now, why sideways? Because everybody knows, right? We know that ranges act like magnets, right? And so just like this big range we saw earlier acts like a magnet, if we see a new range down there, that acts like a magnet as well. That's going to give us a reason now, right? Or maybe not that big, right? A reason now to look for shorts above that trading range, right? That's another way to kind of incentivize the sellers to get involved right now. And then if we go lower, right? If we go lower, which is absolutely possible here ahead of that big news tomorrow, we have another level down here, 41.67. And then look at all this wide open space down at 46.10, 46.02, right? If the bears really get this party cranking, they'll be down around these 46.05 area right here for tomorrow. And again, remember, this is the 12.21 contract right now. These numbers might be a little bit different on the 3.22 contract tomorrow, but it'll all be the same stuff. So try not to take it too literally as far as the price levels go. You'll see what I mean when we do roll over tomorrow morning in our trade room. Now, if we go lower, right? If we go lower, that's going to incentivize the sellers. Why? Because of FOMO. Right? FOMO. I don't want to miss out on the big drop. It's going to get a lot of bears interested in there as well, right? So we either need to bounce to incentivize, we got to go sideways to incentivize, right? Sweeten the deal, or we got to kick up the FOMO meter, right? And get this thing to drop so the bears will start to, participate as we go lower here. So how do we sell it? How do we buy it? I'll tell you, if there's one market right now that is not going to be easy to buy right now, you're looking at it. You're looking at it right here. And the big reason is because you get these trend lines coming down, right? And it's not difficult. You could easily say there's a trend line there. You could say there's a trend line there. I mean, there's a lot of overhead resistance here right now. And it's just not easy to get long on this, because even if we do break above that, we're still above the top of that trading range. So we really have to get a lot of strength here for these buyers. We'll talk about kind of what to do with that here in a moment. All right, how do we sell it? What if the price goes higher, right? What if price goes higher? When the price goes higher here, what you want to kind of think about is these two areas, right? This area here and this area up here, okay? If we can get a pop up, get above some of these highs up here, get up around the high of that channel, this is an easy trade now, because now what we got to do is see if we can get those buyers to come in, try to buy that pullback, and we can sell right into stops, and we can use what we call a failure into pullback combination setup, right? These are very, very common, right? We get above the moving average, the buyers try to get long, we sell into those stop losses, and we grab the first pullback, right? Repeat after me, failure into pullback combination, right? So we get up into those highs up here, give those buyers enough of a bounce to make them think we're going higher. This is not a bull market yet, right? We'll talk about what a bull market will look like here in a second, right? It's a bear market with a profit-taking pullback, right? So we wait for the buyers to come in, wait for them to try. Where are their stops? Their stops are sitting right there. Now, a lot of professionals will take this trade short. A lot of rookies won't. The rookies, of course, who don't really trust it yet, they'll get that lower low in price now, and they'll now go in for that follow-up trade, right? So you've got your buyer failure into your pullback combination. Where's my objective? My objective is to retest that low, right? Anytime we see a strong move, we expect a retest of that low here. Now, what if it really pops, right? What if it really pops and makes that run higher? This is where the buyers have a chance to grab control. This is also where the sellers will really start to get excited here. Anytime we see a really big pullback, that's when you want to break out that 2-try failure, right? So 1 try for the bulls, 2 try for the bulls. Notice that we let them try twice on this because of the significance or the strength of that pullback. Once those buyers try twice, same thing, right? Stops are right there. You can sell right into those stop losses. And then oftentimes when we get these these big pops, right? Oftentimes now the market won't pull back to that moving average to get you that failure into pullback combination, and you got to go looking for a trap. Traps are really, really common after we get that, again, strong bounce off the low, up into resistance, buyers try twice, two try failure, and then as the market rolls over, right, it really starts to pick up steam because everybody got caught off guard, right, getting shorted or, buying into it, and now we grab that trap set up on the way back down to retest the low. This would probably be maybe the best possible scenario for us, right, if it does bounce off that low. Now, right now, maybe you're wondering, all right, Joe, at what point does this thing turn bullish? It turns bullish. Think about it. We have to at least clear this trend line, right? That's for sure. And the buyers have to hold the pullback and go, right? The buyers have to get above the moving average. They have to pull back, right? And they get a jump. We have to see some very good strength coming off of that moving average. Now, do not trust the strength of that first pullback, right? That first leg higher, it happens here, right? Look, do you want to buy up there too? I don't, right? I'm going to wait for some proof to get those buyers back control. If they can get a 1, 2, 3 reversal, bingo. Now we can find a new channel. Now we can drill down, right? And we can find the entry off the low of that channel, okay? Repeat after me. First test is the best test. First test is the best test. 1, 2, 3 reversal. We call these 1, 2, 3 moves in our trade room. And then, of course, first test is the best test. Now, what entry, how do we buy it? Do we just blindly buy it? Of course not. We don't just blindly buy it, and we don't trade off the 6,000 tick chart. We're going to drill down, and the two most common entry patterns are what we call failures, which we talked about before, and traps, right? These are the most common off the low of that, right? Off the low of that channel. Trap first, into failure, into pullback combination. Now, I'm not going to go into all those small details about the actual entry techniques, the rules we use, the best time frames to use for those entries. What I'll do is I'll cover all the entry techniques in a free quick start class. I'll put a link up there for you in the upper right-hand corner. That quick start class will give you a clear roadmap, the same roadmap that we follow every day in our trade room to find the best trades with all of our students. You're going to love that quick start class, so make sure you grab that link in the upper right-hand corner if you haven't done so already. The buyers, of course, if they can take control, they want to get back up around that 47.05 area. There's a lot of tops up there, right? So that's going to be an easy objective there for those buyers. What if we go sideways here, right? What if we go sideways here? If we go sideways, what do? We now use that new range as a magnet. Ranges act like magnets. In a bear market into a trading range, what do we do at that point now? Now what I'll do is I'll start getting a little bit more aggressive on my resistance levels, right? I'll mark up that area, right? We start finding resistance above the top of that range. We oftentimes will get like triangle levels, right? Triangle levels, things like that. Resistance triangle levels, expanding trend lines like that above the high of it. The bottom line, though, is if we do go sideways in that range, okay, do not confuse that. It's still a bear market, and that range acts like a magnet. We'll try to wait for that pullback. Eventually what happens is the bears will run out of ammunition. Let me get this a little bit further here so you guys can get a better look at this, because this is one of my favorite trades here. So bear market into a trading range. Okay, we find those, we stack up those levels of resistance above, right? Trend lines above, things like that. We wait for the sellers to basically run out of bullets. And once they do, the price will pop up above the high. Buyers almost always fall for this trap, right? Like this one right here, right? It's a range. Sure enough, the bears, they run out of ammunition. The price pops up. The buyers just can't, I don't know who buys these things, right? But the buyers come in, they can't resist, and we can sell them right back down again. Well, I know who buys those. I used to be the one that would buy those breakouts, right? They all look very convincing. The breakouts always seem to look pretty convincing, don't they? So let those inexperienced traders, let them fall for that trap, and we can now sell with another one of those failure setups, right? Above the high of that trading range. Now remember, this is where the good stuff happens, right? Now we can mark up the amount above, right? See how I'm marking that area up right there? Now we can mark up the amount above. We can mark up the amount below. That now becomes the pendulum swing target. Okay, that's the pendulum swing target. Now, quickly here, mark that low, mark that high. What was it again? First test is the best test, right? First test is the best test off the high of that channel. Okay, it's a buyer failure pattern. And then I don't know what specific entry pattern we'll get off that new channel. Maybe it's a bull trap. Maybe it's a buyer failure just above the moving average, right? Like this. Maybe it's a pullback combination. You get it. Again, I have literally hundreds of examples of these setups in that quick start class, right? So that's how we'll trade this if it goes sideways. If we go lower, right? If we go lower here, you know what? Why don't we talk about that on the NASDAQ, right? Let's go to the NASDAQ because the NASDAQ's a little bit more bearish, believe it or not. We'll talk about how to trade this as it goes lower. We know where the market wants to go, right? At least at this point we do. Pretty good idea where it is. So what we'll talk about next in the NASDAQ is it'll apply to the S&P, right, as well, right? And so we'll keep kind of moving through this video here tonight, talking about, because again, they're all kind of the same stuff, right? They're all kind of the same stuff. Let's keep going. Okay, so the S&P, get a pretty good idea of what the pullback looks like here, how to trade this thing as a range. How about the NQ? The beast, the NASDAQ futures here. Well, first things first, what a move. Like, what a move. Anytime we see this much movement in one day, what usually happens? A range the next day. Now, is it possible we get a reversal? Absolutely. Anything is possible, especially in today's, crazy world we live in right now. But what is most likely, right, is a range at some point tomorrow. We don't usually see markets go more than 4 legs down. 3 legs is usually what you get. 3-legged move, right? Markets love the number 3. Usually we get 3 legs. This one you can see, pretty much with 4 legs. You could also say too, the breakout leg is the measuring leg. You know what I mean? So we're all kind of sitting there at major support levels right now. We're very bearish. Again, there's no question about the fact that we are very bearish right now. What is also very important to kind of keep in mind is we have this beautiful 1, 2, 3 move, right? And we talked about these 1, 2, 3 moves earlier. And you're going to learn a lot about these 1, 2, 3 moves. I use these in very different, various ways in the trade room, right? We can mark up that low. We can mark up that high. Everybody wants to sell what? Yeah, the first test, right? Everybody wants to short the first test of that channel. On top of that, look at the underbelly of this move over here, right? So we know that what was support basically yesterday, right, can become resistance tomorrow, right? So we can use that area now for basically a breakout pullback, something like that, right? So we've got that area overhead as well. Anytime we see, and kind of one final comment, right? Anytime we see this much strength, right, in one direction, what are the odds? The odds are very good we go up and back down to retest the low, right? That's why I said on the S&P. The S&P has kind of finished. The S&P got everything it wanted today pretty much, right, as far as the technicals go. The NASDAQ does leave a lot to be left kind of looking forward to, here for tomorrow. So we're bearish. We're sitting at lots of areas of support here right now. Again, this is the 1221 contract, so keep in mind, likely going to be over on the 321 contract. Lot of trend lines overhead, right? A lot of different various trend lines here overhead. Again, unless we see some real strength here from these buyers, really going to be careful trying to buy a market that is this bearish here right now. A lot of this will be the same, right? A lot of this will be the same here on the NASDAQ. Whenever I see this much strength in one direction, I start thinking about those 3 different types of pullbacks. Now, we talked about 2 of them on the S&P, didn't we? Yep, the failure and the 2-try failure. What you want to think about now is, and then we'll talk about if we go lower here, right? I want to sell it as it comes up, right? So here's one way to think about it too. One way to think about it is a shallow pullback trap, right? So we got shallow pullback. we got modest pullback, we got deep pullback. 3 types of pullbacks, right? What you want to think about here is if we get that shallow pullback, maybe we don't get that nice, ideally you kind of want to get up into that, 16,240 area because that's the underbelly of that big range. But let's say we don't get that far, right? Let's say all we do is we get this little tiny pullback here. Think about a trap, right? Now traps are always your best bet whenever you don't want to sell very low. In this case, right? Selling low. Big move down, possibly a range going to brew in here. A trap will really be the kind of not the safest, but the most reliable trade here, right? You take 100 of those traps, almost all of them are going to be winners. So a shallow pullback trap, right? Shallow pullback trap. Or we really pop up, right? We get above that moving average. Buyers come in, they foolishly try to buy this market because, hey, it's gone too far, right? Isn't that the same reason that I used to use when I would buy these big bear moves, right? It's gone too far, right? It's reversing. Let's buy. No, it is not evidence yet of a reversal. Let those buyers try to get long, right? Let some other poor sucker take that trade, right? You are more than welcome to sell right into those stop losses, grab that failure, grab that pullback, right? This is nothing new. We talked about this before on the S&P, right? So failure pattern, pullback pattern, back down again. What if we really pop? Yeah, we really pop. We really rip higher now. Let them try twice. 1, 2, right? Where are my stops now? Right below those lows. I always like to, on these 2 try failures, and this of course will also apply to the S&P. One of my favorite ways to take this type of setup, right, is to find a trend line, right, or grab a trap above that high, right? The trap, the trend line, whatever it is, right? We want to look for that nice juicy signal candle coming off that high. That is a gorgeous short and probably the most desirable trade we could possibly get if the price pulls back here right now. As the market rolls lower, don't forget, oftentimes you'll get that pullback right away and you can add more or jump in right off the pullback depending on your level of comfort on this strategy. But if it doesn't pull back right away, right? If it kind of grinds lower like that, and again, these love to do that because, again, everybody gets caught up there, the price collapses. And when it collapses, what's the best way to avoid selling low? You sell a trap, right? You grab that trap high from there, right? So 2 try failure into that trap. Now, how do we trade the reversal? Yeah, I mean, the NASDAQ can definitely reverse. Anything's possible, but they have to get above the moving average, right? They have to hold that pullback, and they have to really jump, right? They really have to jump, and that's kind of it's simple as that, right? Every time the market's gone above the moving average, right, the bears have sold this thing right back down again. So there's no reason for me to trust, this move higher here. So let them prove to us. If they can prove it to us and we get that nice rip, going higher here now we know this leg right here, and again, all of this will still apply to the S&P as well. All of this technique I'm talking about right now will apply as well. The first leg, right? Remember how I said before, the first leg is the third leg, right? So first leg, okay, that's going to be your measuring leg. Then find your channel, right? Grab your trap, right? Grab your trap. Grab your your seller failure, right? Grab your pullback combination. Again, I'm just simply drawing the screen right now. You'll see a lot more examples of these setups in that quick start class, all the rules, time frames to use, everything's covered there. So again, right? Trap pattern, failure pattern, pullback pattern, right? As we go lower or as we go higher, where's our target? Well, obviously big target up top here, right? That's pretty easy to see. But what I'll be looking for is be more precise. You can always be a little more precise with these. The first leg, again, forget the middle leg, right? The first leg and that third leg are very, very symmetrical, right? So we got that size, that size. That's going to tell you, yeah, they're going to want to go back to those highs up there, but that will give you an idea of kind of where that target needs to be, right, as we go higher there. So that's definitely something that we're looking for here on the reversal going higher. If we go sideways, not a lot is different. Again, on the NASDAQ here, if we go sideways and we start chopping around, what do? We find levels of resistance up overhead. We wait for that pop up, right? The strength of that pop will determine whether or not we use a failure or the 2 try failure. We talked about that a little bit here today. Let those buyers come in, let them try to get long, right? And you can sell right into their stop losses. Grab that hidden channel, right? Grab that channel. And what was it again? Yeah, first test, right? First test is always the best test, right? It's that failure. It's that first test. Again, maybe it's a trap, right? Maybe it's a failure. Maybe it's a pullback combination off the high of that channel. And then where's my objective? Yeah, measure the amount above, measure the amount below. Bingo. That's what your objective is for the final target as we go. All right, how do we go short here? How do we sell it as it goes lower? Okay, that was where we left off on the E-mini S&P, right? So what if it keeps going lower? If it keeps going lower, first of all, if the market keeps on rolling lower, what you want to think about is we're going to go out, we're going to find a more aggressive channel, right? So right now I've got this channel, up here. If it goes lower, I'm taking this bad boy, I'm drawing this right down off that low. I'm going to find that right there, and I'm looking for that first test right off the high of that channel. Okay. Now a lot of times it'll do something like this where it'll punch lower like that, right? You'll grab your channel, right, like that. Again, trap off that high, you know what I mean, right? Trap above the moving average, buyer failure, pullback combination as we go down here. Where would this market want to go at that point? It'll probably be this leg right there, right? It'll be that leg. Well, where's our next level? 15,900, quite a ways away, right? Quite a ways away down there. So again, let's say, for example, we keep on, right? Let's say, for example, this market opens up, right? And it just tumbles and begins to run lower here. If it tumbles and starts to run lower here now, again, mark up those prior swings. Find that new channel. Get above those prior swings. Get above the moving average. Rinse and repeat. Remember, anytime we see this much strength in one direction, what are we looking for? Up and back over, right? Up and back. It's one of the most reliable ways to make money in these markets is to wait for those nice strong moves, wait for that pop, trap in the opposite side of the market, either with a trap setup or a buyer failure, and then hit them right where it hurts, right? And again, that leg down right there, that'll be your first leg, right? That'll also be your measuring leg as we go. All right. Another one to kind of keep in mind would be if this market was to start to kind of dribble lower, right? It doesn't shoot lower, it kind of, grinds down like that. These grinders happen a lot because all the buyers that got in earlier this month, they're getting out, right? And the market kind of grinds down here. If it keeps grinding lower, mark up that low, right? Mark up that low. Again, find that channel. And again, find those traps. I like traps because traps are always they're almost guaranteed winners. I can't say guaranteed, obviously nothing's ever guaranteed. Nothing in life's guaranteed, right? But those traps, when you have that much momentum, boy, oh boy, are they really powerful. Trap, failure, pullback, right, as we go. I've got one more. I have one more we'll talk about as we go lower here. We'll cover that on crude oil. All right, oil is a little bit different, right? So we'll grab that here next. So 1, 2, 3 move here, right on that NASDAQ. Got my channel. Will we get that pop up? Will we get the reversal? Right? Who knows? We'll find out here in a few hours. Let's keep going here. How about some crude oil? How about some crude oil here? Over on the oil, the black gold, right? The Texas T. Now again, oil is the only one of these markets tonight that will not be rolling over tomorrow. Oil likes to roll over around the 18th of each month, right? So not the 18th is tomorrow. Tomorrow's only the 10th, right? So we keep it in mind. What's going on in oil right now? Oil, right? Oil, like I said earlier, oil probably is the one that has the most potential to be a reversal. And a lot of this is because there isn't a very big hurdle for these buyers to break through. Plus, if you look back yesterday, right? Remember, this was a pendulum swing. We talked this last night, right? There's your range from yesterday, right? We go up, and of course, the amount now coming back down, right? The amount we went above is equal to the amount we go lower. I mean, are we surprised? That's the way these things work. Like we talk about here a lot, the amount we go right below is the amount we go above. It's just the way that ranges work, right? Ranges are balanced markets. Market rotates back and forth from top to bottom of that range. So you can see we're definitely at that pendulum swing, right? We did a pretty good job of breaking that low, but we're sitting at that pendulum swing right now. So that's definitely an area of support. Again, as I mentioned before, right, the first leg down, right? Forget the second leg. Second leg, right, equals symmetrical as we go lower there, right? First leg, kind of second leg, third leg, perfect, right? Again, the first leg is usually the measuring leg. Third leg is the one that we use. The middle leg is always the oddball, right? Sometimes the middle leg is longer, sometimes it's shorter. It's just better just to use the first and third leg, usually most common here. You also can see here too on the S&P, on the oil, a very strong move down, right? Remember the S&P had got that strong move down and they had retested already. So the S&P has to convince those sellers to get back involved again. There's no convincing necessary on the oil right now. Everybody can see what's going on. It's a very, very bear market. I would also say we may end up kind of grinding down that big round number at $70 a barrel down there. And if they keep going lower here, we got that 69.5 level, that 69.22 area. So we definitely have potential for this oil to keep on kind of grinding down here. I also think the oil has, probably out of all three of these markets, technically speaking, again, we have rollover on the E-minis, which is kind of a big variable for tomorrow, which may give the buyers more of a shot for that reversal. But you'll notice the oil, even though it's very bearish right now, unlike the S&P and the NASDAQ with this big trend lines coming down overhead, the oil doesn't have as big of an obstacle, right? There isn't as much of a hurdle for us to kind of break over here on the oil. And because we had a range here today, right, I could easily see this market bouncing off the pendulum swing, going right back up, taking out that battle zone and right back down again, right, off that high. So we can look to be a buyer on the way up, or we can wait just to be a seller on the way back down. Right, that pendulum swing, I think, really is a very big clue here for the buyers and the sellers on this. What else? What else is going through my mind right now? Well, this range we talked about. Was it on the S&P? Yeah, where it's a bear market, right, into a range. They break down. Everybody sees that range. It does not take a very experienced trader to find that channel. And so look at the spot right there. That's a beautiful spot. Right, for a short. So strong move down says, any pullback right now, any retracement, to be technically correct, will probably be sold, right? We may also see a range down here, and we may also kind of grind down, right, into that big round number. Yeah, I wouldn't be surprised at all, right? Okay, so how do we trade it if it goes higher? How do we trade it if it goes lower, if it goes sideways here? Let's do this. So on the pullback, the biggest thing about this pullback right now is going to be, which type of pullback, right, do we get, right? So we talk about three pullbacks on the NASDAQ, right, where if all we get, for example, is this little guy right there, I'd love to get the top of that channel. That would be probably the ideal because it lines up with that underbelly of that range as well. But if all they get here is the little pullback here, right, think about a trap, right? Traps are your best friend. When you've got a lot of bearishness, you got a lot of momentum on this, but you don't want to sell too low, right? So what do? You wait for a trap high. And again, we use traps in a lot of different situations in the trade room. So you'll see more examples of that inside that quick start class, right? Linked to the right hand corner. So that's the trap, right? Or, right, without being a broken record here, right? Pull back, you got it, right? Buyer failure, right? Into pullback combination. Or we get a really deep pullback. Right? Now, the deep pullback, the buyers don't hold it and reverse it, right? The buyers, yes, right? The buyers try once, they try twice, you got it, right? We drop into that two-try failure. We know how common that trap entry is, right, on the way down. And also, too, something else to remember, there's oftentimes a channel coming down off that low, off that high. I mean, think about how powerful that add-on is right there. It's a buyer failure, a two-try buyer failure because of the strength of that pullback. We have a big bullseye right on that low, right? Big move down, big bullseye right on that low. We pop up. Buyers try a couple times, right? We shorten their stops, take some profit, move that stop down, and then grab that next entry. Or if it bounces you out somehow in your trailer, right, hit that as the re-entry to squeeze a little more out before we retest those lows here. Right? Or maybe the buyers do hold, right? Maybe we do bounce. Maybe the buyers do hold and jump off that moving average. That's why I said earlier, right? This is one of those times where we might get that 1, 2, 3 reversal. We might get that first test is the best test, right? Which you could easily see happening here, right? Market pops up, jumps up. We drill down. Again, this is a 2,500 tick chart here on the oil. We drill down, we find our bear trap, we find our seller failure, our pullback combination right off of that low. We then run all the way into that battle zone. Then what happens, right? What happens? Yeah, the buyers go once, the buyers go twice, right? We draw that trend line down off the head, off the top, crown reversal, right? Crown reversal, back down we go. Find that new channel. Are you with me on this? How about a thumbs up on this point? If you're still watching the video right now, kudos to you. I'm proud of you for being dedicated to learn this stuff, right? But you see that can work? We can easily buy this on the way higher if the buyers take control. We then get, and of course, we talked about this last night in the video last night, right? Exhaustion at the highs, right? When do you try to call a reversal? When you've got what? Two things. One, you've got a turning point, right? Like a pendulum swing or a trend line or something like that, right? You're at a turning point, and we don't just sell turning points, do we? We sell turning points with signs of exhaustion, right? That 1, that 2. And remember, and I'll say the same thing tomorrow in the trade room, the stronger the move up, right? The bigger the 2 try needs to be, okay? The stronger the move up, you remember, you're trying to sell this thing back down, the bigger the 2 try needs to be. Okay, we're not looking for some micro 2 try where you got to have a magnifying glass to see it, right? 2 big tries. Again, find that trend line coming down, right? And short that sucker, grab that new channel, right? And first test is the best test as we go. Those are some ideas there as we go higher here. If we go sideways, not a lot changes. We really still do love this area though. Right? If we go sideways here, not a lot changes. We love that spot though. Can we get up, right? Rope in some of those buyers, hit them right where it hurts, failure, and then again, first test, right? First test down to that pendulum swing, right? Same thing we talked about here on the oil. If we go lower, right? If this market keeps running lower, I think you can probably already kind of see if the market starts to grind down here, right? Grinds down. That's a great possible new channel, right? Remember, draw a bit steeper there, right? Get that trap, that failure, right? That trap, that failure, that pullback combination. We do this over and over again in the trade room, over and over again, right? It's the same stuff. That's one of the nice things about this strategy, right? We're not reinventing the wheel. You know, same market, same stuff every day. Just it keeps working, right? Why would you do different things if it works so well? Anyways, so trap, failure, pullback combo, right? As we go, maybe they pull back right now and they blast, right, and run off that low. Anytime we see a strong move in one direction, you're going to probably see a first test short, right? You're going to probably get some money out of that first test. Maybe it's a bull trap. Right? Maybe it's a buyer failure. Again, I've covered a lot of variations of this already today, so I won't bore you with more examples of this, right? But you'll see a lot more about that stuff, right? When you grab that quick start class, right? So we got that 1, 2, 3 breakdown, right? We know where the market wants to go at that point. Let's see here. Oh, one more too. How about a 2 try breakout? Right? How about a 2 try breakout? How about the market runs lower? We see a shallow pullback, a lower low in price. Traps, baby, right? Now, don't worry about where that is, okay? With this particular type of trade right here, this setup right here, strong move down, shallow pullback, right? Lower low. The lower low is where everybody gets excited, right? Strong move down, shallow pullback, lower low in price. The lower low is what gets it, right? Up and short. Now, good example. Sometimes it all does go back to retest the low. Sometimes it keeps on going forever. You never know, right? Like I'll teach you in that quick start class. Take a 1-to-1 first target, get rid of the risk, trail that stop, and see how far it goes, right? So if we do end up running lower on strength, right, shallow pullback and lower low, traps, right? Traps, baby, absolutely beautiful trap there. If I can find a channel, even better, right? Not necessary, but if I can find a channel, even better. All right, guys. So I think probably the one variable here though about this oil is it may end up kind of grinding down here, and we may see it kind of settle in at that big round number. Okay, don't get fooled by the big round number. It's still a bear market. It's still in a range. You still want to find those levels of resistance coming down. Get up, right? Grab those buyer failures and hit them right where it hurts. All right, guys. But we have covered a lot in this video tonight. Don't forget, we're going to make sense of this for what we actually get tomorrow morning and every morning in our trade room. I will see you guys tomorrow, hopefully, at the opening bell, 8 o'clock Eastern time. We open up our trade room. If I don't see you guys tomorrow, good luck, right? Good luck on your own tomorrow, right? Knock them dead and enjoy the rest of the year, right? Because tonight, of course, is my final newsletter of the year 2021. It's been a wild COVID-induced ride in 2021, and I'm sure 2022 is going to be even better. You know me. I'm always getting better here on my videos, always investing in the education here at School of Trade. So keep in touch. Again, all the membership links in the description below. Hopefully I'll see you tomorrow morning and every morning at the opening bell, 8 o'clock Eastern time in our trade room. Don't forget to drop me a comment in the comment section if you have any questions. And if you have any questions, you can always call that toll-free phone number. Even while I'm off on break here from the newsletter for a few weeks, right? I'll always be here to answer the call and help out along the way. So don't be a stranger. Keep in touch. Drop me a comment, right? Hit me up on the phone line, and or see you tomorrow morning at the opening bell. My name is Joseph. Be well out there. Be nice to each other. A very Merry Christmas, a very happy holiday, and a very, very happy New Year. I will see you guys back here in YouTube land first week in January, right? Monday evening, January the 3rd. Guys and gals, have a great one out there. We'll see you guys next time. Adios, amigos. Bye-bye for now.